Good morning, everyone. We'll get started here at 11 a.m. Eastern on the dot. It's Monday, February 21st. We got a holiday, no stock trading. Futures are still trading. We're going to look at those. But the stock market is closed. Spring is coming. Got the first daffodil and other bulbs coming up. Female duck's back. We're going to have some duck babies. Frogs are out, and the first pond bugs. Exciting to see. All right, got my internet fixed. It was a bit iffy for a while. Big electricity wire, about 100 yards from the house. A guy from the electricity company was poking it with a giant stick, and a huge bang went off, and then my internet was perfect again. Don't try that at home. All right, so the schedule of what we're going to do here, I'm going to be looking at the broader market in Bitcoin first, talking about where we stand, what we're watching for the rest of the month, essentially the next couple of weeks. Then I'm going to talk in depth about Bitcoin dominance and how I use alt BTC pairings to help me enter trades and determine which coins I'm going to be looking to trade. Then from there, I'm going to look at a trade review, both a successful trade and a failure trade on Mana over the last couple weeks. We'll check in on Sol, and then from there, I will go to the YouTube chat and answer some questions from you all, depending on how much time we have left. Gonna look to go about an hour today until noon Eastern. All right, so let's get into it. First things first, we know that we are seeing a significant correlation to the broader market still, the S&P 500, and we know the S&P 500 has been fairly sensitive to Russia headlines. And so that's going to remain the case. The two major headlines that we're looking for, Russia confirmed invasion, Russia confirmed withdrawal. Those are the two major things that we're looking for, and everything else in between is just shifting probabilities. Just imagine it, two ends of a spectrum, and there's a needle of where we stand, a probability. And every time we get a headline that's legitimate, it shifts that probability, and the market reacts to that probability shift. Now, that being said, there's a lot of games being played. I think the U.S., was it zero hedge that the U.S. said, you're putting out false information? So there are sources out there that put out a headline that the bots and the algos react to, keeping in mind these are automated trading systems that just read a headline and instantly react, just like those same bots instantly react to earnings reports or other information, whether it's the FOMC, they essentially are bots that just scan a headline instantly and then react. So there are people that have tried to manipulate price action through headlines that don't really mean a whole lot. So it's certainly just this constant barrage of headlines, and trying to sift through what actually matters and what doesn't is a bit difficult. And for me, again, I'm at both ends of the spectrum. I'm saying, give me one of these headlines, or it's just noise for me to a certain degree. It doesn't mean the market's not going to react to it. The market just made a bull move a few hours ago overnight. I guess that was 12 hours ago or so, in response to Biden going to meet Putin or talk with Putin as long as there's no invasion, blah, blah, blah. And then, then the U.S. comes out and says Russia invasion imminent in days, and we drop back down. So again, it's just a mess of headlines, but we are reacting to them. So bigger picture, the weekly time frame is where I am focused, and everything is based on the weekly time frame and going from there. And we're seeing a ton of different sectors and markets all doing the same thing, because when fear picks up, correlation picks up as well. And we certainly saw that on the COVID dump and then the COVID bounce across all markets. So we've got our all-time high, wrong button. We've got our all-time high, we've got our fear low. We've got our lower high on the bounce. We were anticipating that was the most likely scenario from the get-go because of the size of the pullback. There's a bunch of space for a weekly lower high to be the most likely scenario. Same thing for Bitcoin. We knew to be scouting a weekly lower high, and we are rejecting from EMA resistances in a lot of places, setting those lower highs. So now the big question this week, can we form a weekly high or low, or do we confirm a downtrend? We will not confirm a downtrend without notable bear volume. It's certainly possible that we confirm a downtrend, but I'm sticking with what I have determined was the most probable scenario for the last 3 weeks plus, and I'm sticking with that. And for me, it was always the equilibrium. So I am scouting a weekly high or low, and I will certainly be cautious and protective because I am well aware that we can drop to lower lows, but I am looking for a higher low based off support, and I know that we need a lot of trend changes to shift momentum because the bears have complete control of a daily downtrend, and the bears have complete control of a 4-hour downtrend. And right now we got a little 15-minute tightening range that's testing the lows. So the bears have complete short-term control, and we're going to need a notable shift from the bulls. Really, I'm going to need a 4-hour trend change to the bulls as step number 1 to potentially setting a weekly high or low. That's just the first baby step that we can say, okay, maybe the weekly high or low is shaping up. And we're not watching the NASDAQ as well. We are watching the NASDAQ as well. And it's closer to the bear break. We are right there on top of that support. So it's possible that the NASDAQ breaks bear, but the S&P 500 doesn't because other sectors are stronger. We know that growth names have been a bit stronger and the financial sector has been stronger. So I care more about the S&P 500 than the NASDAQ as far as it relates to the crypto market and really just the market as a whole. So again, keep an eye on the S&P 500. And what the relationship with Bitcoin is, there's been fluctuations where we have been stronger than the broader market and weaker. And just on this last hourly bounce, this was the S&P 500 bounce. It's a bear flag possible still, very weak bounce. And you look at the Bitcoin bounce, it was a very significant bounce. This shows me a bit of bear exhaustion in Bitcoin. It shows me that the bears have been in control for the last 6 days in a row with a solid drop down. And during that time, we saw a drop down of 17%. That's notable. We just hit 12-hour oversold conditions, and we're bouncing from them. We were in 4-hour oversold conditions, hourly oversold conditions. We've seen a lot of bear flags on the way down that cool off hourly and 4-hour RSI levels, but we're seeing, in my opinion, the bounce being this much more significant for Bitcoin comparative to the stock futures, bit of bear exhaustion. So from here, if we're going to get a daily bounce going, keeping in mind, so let's start zoomed out weekly. We're looking for a weekly high or low. And again, what's my bigger picture? What do I think is going to happen on the year for Bitcoin? I don't even care. That's not even in my brain. Until this weekly resolves itself, I'm not thinking about anything but this range from the last 3 weeks. That keeps me nice and focused, and then we'll take it from there. And I know if it's a weekly bull break, we're going to set a monthly high or low. And I know if it's a weekly bear break, we're going to test monthly support. So that's all I care about, bigger picture, but I'm zoomed in from there. And we're looking for the weekly high or low. And we have a lot more space to work with as far as how much can we drop down. The retracement size of this bounce at this point, we got down to the golden pocket here, about 66% retracement or so. And just to compare that to the S&P 500 and its retracement, we're looking more at 75%. So Bitcoin has not retraced as significantly, which means it's holding up a little bit better. So we're scouting a weekly high or low. Bulls would love if the weekly candle, were to close something like this, but we still got 6 trading days to go. So if we're going to set a weekly high or low, what do we need to see? We need to see a daily trend change back to the bulls. And we know that on the next bounce, anything under where we came from, 44.8 thousand, is just a daily lower high. So at this point, if I'm a bear, I'm knowing a daily bounce is inevitable. I'm locking in profit. I'm setting stops. I'm positioning for the daily bounce. And knowing that once that daily bounce gets going, I am absolutely going to be scouting another bearish swing entry for a daily lower high to be the result of this bounce. And what we're going to be watching for on Bitcoin and everybody else is what is the retracement size of this bounce to help us determine the most likely scenario from there. I'm off on my buttons today. So we're not confident our bottom is set yet. We don't even have an hourly uptrend, but let's just for argument's sake say that our bounce is starting on the daily time frame. So we're going to then gauge, do we reject from 40,000 and keep a daily bear flag on the table because the retracement size is less than 382 and that favors another leg down? Does the bounce change the 4-hour trend and see follow through to get us 50% and higher on retracement, 41,000 plus? If so, that creates space. We're still anticipating the daily lower high, but that will create space for the potential daily trend change to shape up. So on any daily bounce, the goal for the bulls is 50% plus if they're going to create the space for an eventual daily trend change attempt. So zooming in more, 4-hour time frame, I can see anything under 39.5 is just a 4-hour lower high and nothing changes. Again, I'm making note, bull volume is definitely notable, showing up, and the bounce is notable. It's our most convincing bounce that we've seen on this entire leg down, but the bulls still have proving to do. Now I zoom into the hourly. All right, there's our 4-hour lower high of 39.5, and I know that if we reject from that level, or even if we break it, whether we reject or break, we must confirm an hourly trend change. And there's been multiple times in the last few days where we see big bull moves with zero follow through because we don't change trends. And I'm looking to the end of last week, there was a big 15-minute spike and we gave it all back. And this was, again, related to futures and stock trading. We V-shaped bounce, we never changed any trend, and then the bears just took over yet again from there. So bull moves up are nice, but it's the trend changes that are needed. Because the bull moves, you can trap some short-term shorts, which is, what this did. Anybody that went short in the last 3 hours is underwater right now, or the 3-hour drop here. But you must change the trend. So if the bulls shape up an hourly trend change in their favor, that's going to be creating the space for a 4-hour trend change to then try and take place, because we will have space for a 4-hour higher low to then try and form. So that is how I sit down at the computer on every morning and establish where we stand. I know what I'm looking for, a bigger picture, and I know the frame, the time frame I'm looking at, and then I zoom in one time frame at a time and see how these different time frames are relating to each other and what their relationship with each other is. Okay, an hourly big time bounce, but we need an hourly trend change. So I know hourly consolidation is going to take place sooner rather than later. If I want to be an aggressive bull looking for a daily bounce position, I'm scouting an hourly higher low entry and using the low as my stop. So if I want a bull position and I'm not in one, I'm not chasing up here. I'm saying, all right, once we top out, whether we top out here or whether we see another leg up and top out, I'm waiting for hourly consolidation to be looking to scale in for an entry, for an hourly higher low, knowing that the bulls still have to prove the trend change. So that's where we stand. And if all of that just sounded very confusing to you, don't worry about it, because that's the case for everybody when they start. And it takes a long time for it all to start making sense. But again, I cannot stress enough how many times I get messages from people on YouTube that say, I've been watching you for 6 months and it's finally starting to click. So stick with it, because it will click. And once all these time frames and how they relate to each other does click, the world makes a lot more sense, at least as far as charts are concerned. So that is where I stand. Bigger picture on the S&P 500 and Bitcoin. Now we're going to talk about dominance. And this is, again, another very confusing topic. And this is where I lose a lot of people. And it took me a while to get down these relationships. It's just another tool. I didn't look at dominance and alt BTC pairings when I first started trading crypto for the first couple years. And it was 2017, 2018, bull run, massive moves up, massive oversold bounces and dumps. And it was a much easier trader environment. I've never seen a market more purely driven by emotions. And knowing that charts depict emotions and human behavior, it was easy to take advantage of the charts. And it was the cleanest, clearest technical analysis I've ever seen in my entire life, and may ever see again, being a new market. And then things changed, and we then entered a range, right? So we topped out, and we then traded within that range for a couple years. So it's no longer easy peasy. I now need to sharpen an edge if I'm going to be able to continue to successfully trade this space and outpace, people that are holding. And so from there, that's where I started to incorporate the dominance chart, but more importantly, alt BTC pairings, because I want to know with all these coins, back in 2017, it was the big three. You traded Bitcoin, Ethereum, Litecoin. That's pretty much it, at least for the initial wave up. And so now we have a bajillion coins, and they take turns as to who's the leaders, who's the laggards, big move over here, big move over here. And so we need to be watching the BTC pairings for clues. And now I'm going to go into it a little bit. And again, I'm going to lose some people here, and it's going to be confusing, but stick with it because it clears up eventually. And just before we get into it, on Twitter here, we've got this pinned tweet that has some helpful graphics. This is how time frames and trends relate to each other. And then this is the one I want to talk about, the Bitcoin and altcoin relationships. So I'm not going to go over it in depth here, but that's on our Twitter if you want to check it out. And big shout out to Big Cheds, who gave us a nice 3,000 follower bump this weekend. Over the 50,000 mark. Appreciate all of you who have been along for the ride and everybody that's new. All right, so Bitcoin and dominance. So when I'm looking at this dominance chart for Bitcoin, I'm looking at the weekly time frame, and right now all I care about big picture is this tightening range. We got a low, a high of the bounce, a double bottom, a lower high, a triple bottom, and I'm scouting a lower high, anything under 47.7. Why does this chart matter to me? So this chart matters to me because it tells me that we are currently in a sideways tightening range for the last 9 months. And it could potentially play out, a year. It can play out another few months, absolutely. But I look back at the history of this chart and I say, when is the last time we had anything close to this? And we haven't. We haven't had a range. I guess, if we have to pick something that was this tight, we're looking back here, just sideways. Why do I care about sideways? So if you're trading anything, an equilibrium is a pattern of higher lows and lower highs and a tightening range. And you very often see that tightening range, and that tells you volatility is incoming. Now, I can't say I know the direction the equilibrium is going to break. I can determine probabilities, and I can look back at prevailing price action and help gauge those probabilities, but it's the break that we need. And again, the tighter we get, it's just a rubber band pulling tighter and tighter, and it eventually snaps. And when it snaps, you get your breakout or your breakdown, and a significant amount of volume and volatility comes in. And just an example off the top of my head, we had gold, which was in a very long-term tightening range. This is the 2-month chart. So from 2016 to 2019, this is a 3-year sideways pattern, and the bull break provided significant opportunity. This is the most money I've ever made trading gold, and I knew a year in advance. We got a video on YouTube that's intro to trading gold and miners, and I made it during this equilibrium saying there's a significant opportunity coming because this equilibrium is going to break. And again, I couldn't say it's going to break up or down, but I was certainly ready for that bull break when it happened. So the longer and more drawn out something is, the more follow through you can expect. And just one more before we get back into dominance, the dollar right now, this is a massively important chart to be watching if you're trading markets over the next couple of years, because this is a 6-month, this is the longest time frame chart I've ever looked at. And I've been looking at it for years at this point, and it's helped because I was looking for this higher low when the world was bearish the dollar back in end of 2020 and start of 2021. And we have a 6-month or 6-year equilibrium on the 6-month chart. So we topped out, set a support, lower high, higher low. I'm scouting a lower high. We know stocks and crypto want a weak dollar. They want that 6-month lower high to form. But we know that eventually, sometime within the next, I'd say 2 years, but maybe 3, we're going to look for a break of this equilibrium, and it's going to be massive as far as its impact on markets as a whole. And we can see, we had a tightening range back here for many years, 2009 to 2013, and then that break took place in 2014. But again, just pay attention to that, and I'll be talking about that all the time once we continue to tighten up and we get close to a break. So, little tangent there. But Bitcoin dominance is tightening up. And when it breaks, it's going to have massive implications because I know that the break of this chart will bring volatility to the cryptocurrency space, and it will be significant volatility. Can I say we're going to be a bull break in crypto or a bear break? I can't. I can't say which it's going to be, but I know to be positioning and be prepared for that volatility. So we can look back historically and say what happened the previous times we were tight and had breaks. And we can see, we got tight back here for a significant amount of time, August 2018 to April 2019, fairly similar amount of time that's gone by here. And we then saw a bull break take place in April 2019, and it followed all the way into the summer of 2019. And at that point in time, in Bitcoin, April 2019, that's when we saw volatility pick up. April 2019. So that's back here. And that is when things started to heat up big time as far as a big time breakout. The other time Bitcoin dominance was fairly tight was back here. Again, just a handful of months trading sideways, and then a bear break took place, and that was in January of 2020. And again, just going back here, January 2020, we ended up seeing another solid leg up. And then, of course, COVID took place, but before COVID, it was a 50% bull move. So we have two examples. In both of those examples, Bitcoin went 50% plus. And those both examples were to the upside. It doesn't mean it's going to be to the upside, but it tells us significant volatility, whether it's 50% up or 50% down. A tightening dominance range, then breaking, showed us that volatility was incoming. So again, I'm watching that dollar and I'm watching this dominance chart for a break to take place later this year. Not worried about it right now. Probably not worried about it for 3 months plus at a minimum, because I am anticipating a weekly lower high and continued tightening range is the most likely scenario, and we're potentially setting that weekly lower high from here. All right. So from there, dominance. How does dominance relate to the price of Bitcoin? The most common confirmation of strength in Bitcoin that we've been seeing the last 2 years during the mostly bullish environment, obviously significant consolidation taking place along the way for Bitcoin. But the last 2 years, tons of volatility, but overall bullish. So what we see is Bitcoin leading the way up on a bull move. It tops out. It establishes a range, whether it's a 4-hour equilibrium, a daily equilibrium, whatever. It tops out after a bull move and goes sideways. And while it's in that sideways range, we see confidence trickle out. Confidence is contagious. Fear is contagious. So big bull move. Oh, I'm bullish the crypto space now. Bitcoin's range bound and confidence seeps out into altcoins, and altcoins then play catch up, and their moves exceed the moves of Bitcoin. So a Bitcoin dominance move up, we top out, and then the dominance consolidates as the altcoins get a second leg up, because the altcoins going up faster than Bitcoin leads to the dominance dropping. And so that's happened time and time again. Just the most recent example, February 4th to start the year, or to start the month, biggest green candle we've seen in a long time. Very confidence building. Like, whoa, that's the bulls proving something. Daily trend change more clearly confirmed. And from that point in time, what we then did was we topped out on that initial bull move. Bitcoin led the way up on that initial bull move. Going to February 4th. And then we did sideways. This range right here. And you can go back and look at the time. But this range, when we traded sideways after this bull move up, altcoins went bullish here as well, but less significantly. And then when Bitcoin went sideways, altcoins went significantly bullish and far outpaced Bitcoin on the move up. And you can literally see the hour after 41.9 was hit is the hour that the alts got their leg up and then really turned on the jets. And that gave confidence to the crypto space, and that bullish action continued for another week or so. Now, what happened recently was something that I have not noticed in a long time. Really, I can't remember the last time I noticed it. And it was the exact opposite taking place on this drop. And what took place on this drop is Bitcoin led the way to the downside, which is unusual. Usually when Bitcoin is dropping and there's red in the crypto space, alts are dropping harder. But in this instance, on February 17th, Bitcoin drops further and then it trades sideways. And while it was trading sideways, right here, alts dropped with Bitcoin, but not as fast. And then as Bitcoin traded sideways, the alts saw a second leg down. The exact opposite of what a confident bull market gives us. This was then a confident bear market for another couple legs to the downside. And so in the moment, I wasn't acting on it. I was observing it and making note of it. And then obviously the last 3 days saw some fairly significant prolonged weakness. And RSI levels stayed crunched for a while, and we just kept dropping. So for me, that's a mental note. All right, you made that observation. You didn't put it to use this time around. And I actually stopped out of some bull trade attempts, which we're going to look at. But the hindsight review is, all right, you made the observation. It did get bear follow through. The next time you see this, if you're looking for any bounce positions, you're going to be more patient. Maybe you're going to use smaller position sizes, but you're going to remember this time. It burns it into your brain, or you write it down if your memory's not that great, because it was a clue for further continued weakness. And again, it was just complete opposite of what we see in a bullish confidence scenario. So that's how I'm using dominance. Now, let's look at BTC pairings. I'm going to talk about it in a trade review on Mana. I guess we'll go right into that. We'll look at Ethereum, just regular old technical analysis in a minute. So Mana trade review. I've taken Mana trades twice. I've actually 3 times this year that I can recall off the top of my head. Maybe it was 4, but the most distinct 3. The first was first daily oversold conditions coming off all-time high. Backburner trades. If you don't know what backburners are, Google backburner chart guys. We got a whole video on it. So this is when you're hitting first oversold conditions after a significant bull move. And those of you have been following along know that we made good money on this bull move up in Bitcoin, the all-time highs run, where we were just buying 5-minute back burners for hourly higher lows, great bounces, 15-minute oversold back burners for 4-hour higher lows, hourly oversold back burners for daily higher lows. And the majority of my gains came from those trades. And so it's the same thing on a longer term time frame. It just takes a lot longer to play out. First daily oversold conditions, scouting a monthly higher low. The reason I'm interested in Mana is when you go from a low to a massive 1,000% plus bull move, and then you get back a ton of that move, you scout an equilibrium. And one of my best swing trades of 2021 was doing that on Bitcoin and getting these monthly higher lows on Bitcoin and Ethereum. And I didn't expect the higher high, but significant move off of that pullback. So for Mana, I'm looking for the same thing. I'm looking for the monthly higher low, and we hit daily oversold conditions. So that doesn't mean that daily oversold is going to mark our monthly higher low, but I know it's possible. So I want a position for that. So played this bounce. I forget exactly where my entries were, but scaling in, probably a couple before the $2 range, a couple below $2, and then scaled out into the bounce and definitely left some money on the table. I was all out the position probably by here, and I missed the extra 20% leg to the upside. I was not expecting that significant strength that fast on that bounce because obviously, sentiment and perception and everything, I know I'm looking for a bounce, but was not expecting was that a 100% bounce? It was 100% bounce in like 2.5, 3 weeks. So, okay, learn my lesson. Mana bulls want to party. So after that, I was all out my position, again, scaling in, scaling out. And I said, all right, we just pulled back at this point in time. Mana just pulled back over 20%. We just pulled back 20% plus on a straight waterfall drop from the high of the bounce. 1, 2, 3, 4, 5 days of drop. And what did we see? First 4-hour oversold conditions. It was a back burner. We just had 100% bounce, significant strength, a lead alt bull. And so I know when that's the case, there's going to be bulls looking to buy the dip because they missed the move or they're looking to reload, whatever the reason is. And so we see first 4-hour oversold conditions. You can see the RSI got right down to 31. And when we were at the low of that candle, it was probably something like 30.9. So we didn't quite hit oversold, but it was bulls front running oversold conditions. And the strongest coins, you'll find that we bounce from RSI because, everybody knows at this point about oversold bounces, and perhaps I'm to blame for some of that. But rather than going to 29, 28, we go 32, 31. And people want to skip ahead of the line, and so we never quite get to that point. So that was the instance here, but I had a really good initial entry. It was 277. Again, scaling in. So when I'm scaling in, I will sometimes only fill one position, and that's A-okay. Granted, it's not the bigger, it's not a bigger position size, and it's not going to be a home run trade. But if I only fill one position, that means I nailed the bottom. And that means I'm very quickly in the green, and that means it is as comfortable a trade as you can possibly be in. Nothing to worry about. Bounce gets started, I set my stop. It's either a break-even risk or a tiny risk, and I just let the trade play out. And as far as, the psychological impact, that's as easy as it gets. No hard work whatsoever. So I was planning on entering multiple positions. One at 277, maybe one more at 265. And then once I fill the total amount of trades that I'm going to take, total amount of positions, in this instance, it probably would have been 3. If I had filled all 3, then I place a stop level based on the dollar risk that I'm willing to take. Because I'm not playing off a previous support. I'm playing off the fact that we're in oversold conditions after a 25% pullback, after a significant bull move. So only filling one position, bounce gets going right away, and set my stop under 272 and had very little risk. And again, another example where I was not expecting the size of this bounce to be this massive, this quick. We just shot right back up and ended up going, in less than 2 days' time, we were up 24%. So again, it's another instance where I was scaling out and did so. I'm not nailing tops and bottoms. In this instance, I nailed the bottom, but with my trading style, I'm just looking for the meat of the move. So I don't mind that I exit a bit early and leave money on the table, but exited some at 308 and then some in the 3 teens. And again, I missed that last leg up, just like I missed the last leg up in 2017 before Bitcoin topped out at all-time highs. I missed the last legs up, but I'm not holding the bag when it rolls over. And so, I can look at it and say, shouldn't have sold at 308. I should have sold at 335. But there we go back down to 260. So was that sell at 308 a good decision? In the end, yes. But so again, just want to it's important to focus the frame, your mindset, because in this game, it is way too easy to get into a negative feedback loop. And if you're always hard, again, you're not going to nail tops and bottoms. You're going to miss the bottom and the top of the vast majority of your trades. And if you are beating up on yourself and saying, darn, I should have done this, I made a mistake every single time, you are going to keep yourself held down. And you should be looking on the bright side whenever possible, because there's always a bright side that you can look on. And that's how I approach life. Every aspect of life, if there is a bright side to focus on, that's what I'm looking at. And that keeps you as a much happier individual. So with trading, it's the same. That doesn't mean make excuses for yourself. You got to be hard and stern on yourself sometimes. I made a mistake. I messed up. I need to learn from that. But there is always a bright side. So that was my last mana trade. Successful win. And that went well. All right, so now I'm all out. Daily lower high is set. I know I'm scouting a weekly lower high because we're scouting a weekly lower high in the entire crypto space. So I know that's coming in the back of my mind, but due to the size of this bounce, I think that we may set an equilibrium here. I think that we may set a higher low off of 272. One more note about the previous trade that I forgot to mention. It was an hourly falling wedge that marked my entry. And I love falling wedges, but it's falling wedges where the longer term time frame aligns with the most likely scenario. If you're in a daily and hourly downtrend and you're looking to play a 5-minute falling wedge, the probabilities of that wedge breaking bull and giving you worthwhile gains is so much lower than if you're in a daily and an hourly uptrend. Because if I'm in a daily and an hourly uptrend, a 5-minute falling wedge means I'm scouting an hourly higher low to continue the trend, and I'm using that 5-minute falling wedge to try and pinpoint that hourly higher low. If I'm in an hourly and daily downtrend, that 5-minute falling wedge is not coming into play with the longer term time frames in any way. It's on its own. If it's in an hourly uptrend, you got backup. There's backup of the hourly trend in your favor. If it's in an hourly downtrend, there's no backup. You can fall right through that falling wedge and keep dropping down, which is, we're going to look at what Mana did here. But again, the bull break, this is why I was in at 277, the hourly falling wedge shaping up, looking for a daily higher low. So I was looking for the exact same trade. All right, we just pulled back 20%. I know it's a coin that has a lot of attention and a lot of volatility, and another hourly falling wedge was shaping up. And when I'm in a trade streak, when I'm in the flow state and in the zone and I'm trading well and I've got a solid profit on the month and I've got 5 trades in a row under my belt, I'm a little bit more loosey-goosey with my trading. That doesn't mean I break rules. That doesn't mean I just buy and hope. It just means that I'm a bit more aggressive because I'm feeling it. And that's how, again, you want to pump the brakes. Nope, you want to pump the gas with your trading and be more active and aggressive and trade with larger positions and trade more often when it's a trading environment that aligns with your trading style and your edge, and when you're in flow state. And when the market is choppy or confusing, or let's say I'm an oversold bounce trader and we're very weak and the bounces aren't really taking place, that's when you want to pump the brakes and be trading less. So I was coming off a streak of, on the year, doing really well as far as, I wasn't trading, I've been very picky in 2022 and I've been swing trading. And I think the last distinct 3 swing trades that I made were all profitable, and I took a couple coins at a time per trade. So that's the mindset of me heading into this trade. And I say, okay, well, we're pulling back significantly. I'm looking for a daily higher low compared to 272, and I'm just going to keep guns blazing because it's working. And I'm going to have a clearly defined stop level. I'm going to know exactly how much I face to lose if I'm wrong, but I'm taking this trade attempt. And it was the same thing, an hourly falling wedge looking for the higher low compared to 272. And the trade setup that I took here was I recognized this bounce was significant and created space for an hourly higher low. I entered on this hourly consolidation. I recognized a red flag when we failed. I needed that hourly trend change there. That is what I was looking for to enter that trade. And if the hourly trend confirms there, our daily higher low is shaping up. And it failed, and we rejected from that resistance line. And then we dropped to a lower low, and that's where I stopped out. As soon as we get under 2811, definite red flag, stop out down here and take the loss on the trade. Now, in the end, in hindsight, had I held last night, I would have been profitable, or I would have gotten back to break even. But that is an extremely dangerous, bad habit reinforcing way to look at things. Because yes, this time it would have worked out and I would have been saved. But what about the 1 in 5, 1 in 8, 1 in 10 times where instead of taking a 3% loss, Now I'm down 10% and I feel sick to my stomach and it's impacting me psychological and I can't go through my day without checking on the charts 47 times. So for me, I'm protecting against that 1 in 10. There are many times where I will stop out and I'm pretty darn confident that if I keep holding, I'll be all right. But again, it's that 1 in 10 times that won't be the case and I expose myself to a big loss. And it happens enough. You know, you've all experienced it. It happens enough where it's that one time that ruins a month or ruins 2 months or more, unfortunately. So for me, I will always, I look back and say the trade premise of what I was looking to take place did not shape up. So absolutely, I'm going to stop out. I was wrong. That was not our daily high or low. And in hindsight, some red flags were the fact that Bitcoin weekly lower high was set and was in a daily downtrend already. So that decreases the odds that Mana is going to set a daily high or low. And in the end, Mana now has weekly consolidation underway as well. The difference is Mana is stronger and has way more space to work with for a weekly high or low to form. We just looked at Bitcoin's retracement was 65, 66 down to the golden pocket, and here we are at 50%. So Mana is definitely one of the stronger weekly consolidations that we're seeing out there. And another aspect of why I was looking to make this trade is because the Mana BTC chart was looking for a daily high or low, and it did set, but I was just a bit too early. And this Mana daily chart is going to be key from here because if it rolls over, it's in equilibrium right now. And again, what this chart is showing us is who's stronger, Mana or BTC. And we look at this chart and say, since that bottom, Mana has been stronger than Bitcoin. It's stronger on this whole move up, weaker for a while, big time stronger move again, weaker for a while. And I can tell that on the bounce, the last 12 hours, Mana has been stronger than Bitcoin because of that big move up here on this dominance chart or on this BTC pairing chart. That being said, if we drop down from here and break the low that we just set, I will consider that a daily equilibrium bear break, and that will be a red flag for me for playing Mana bullish. Because at that point, if that bear break happens, Mana's retracement of 50% is going to drop down faster and play catch up to Bitcoin's 66% retracement. Because that's going to show me Mana dropping harder and faster than Bitcoin. And that's obviously not something I want to see if I'm looking bullish. So that's important to be keeping an eye on from here over the next couple of days. And again, every time I'm looking at the Mana BTC pairing or an altcoin BTC chart, what you want to see is the BTC pairing directly correlated with the US dollar pairing in an uptrend, because that means you're just significantly outpacing Bitcoin and showing strength. And I call that the spotlight. When you're in the spotlight as an altcoin, you have the BTC pairing is either the exact same as the US dollar pairing or stronger. And that is your ideal scenario. So I use the BTC pairing charts to determine who's stronger. And if they're in uptrends or they shift momentum, that's notable to me. So for example, I'm looking at Sol and I'm looking for a monthly high or low, because when you see a massive rocket to the upside to all-time highs and a massive dump, the most likely scenario is a monthly high or low in tightening range. Now there's a huge amount of range where that could form. We could have formed our monthly high or low at 120. We could form it at 60. That's a massive difference, obviously. So we can't just scale in and hope to nail the monthly high or low, but we can look for clues that it's shaping up. And so looking at Sol BTC here, we just saw the first littlest indication. Sol BTC has been in a daily downtrend since we topped out early December. And in early December, that is when we saw a significant leg down here. And that's when the weakness really started. This is essentially bulls trying for one more all-time high, failing, and then we rolled over into monthly consolidation. So we have been in a daily downtrend on the BTC pairing since then, which means Sol has just been weaker than Bitcoin for month after month after month. And that's trying to shift ever so slightly. I was just on the wrong chart, but it's the same thing. Sol BTC, daily downtrend since that top, month after month after month. But we did just change this daily trend for the first time, higher low and higher high. Granted, zero follow through. And this red candle today is definitely a bit of a red flag for that. But I'm paying attention because when Sol BTC finds a bottom and finds its monthly high or low, the probabilities will significantly increase that the US dollar pairing is finding its monthly high or low as well. So we don't have any information that that is taking place, but we're watching for it. And again, we just I made a trade attempt in Sol that I stopped out of as well. It was pretty much Sol and Mana 2 days ago, I guess it was, that I was attempting these bounce plays. And that was essentially the first crypto trading loss that I've taken this year that's been meaningful. And so for me, that means, okay, you had a nice streak going and you were trying to capitalize on that momentum and keep that momentum going, and you hit a bit of a bump in the road. So that means I'm trading less. I'm a little bit more picky now. I'm no longer as loosey-goosey. The next trade that I take, the last thing I want to do is go red, because then I'm in a red streak. And every time I see one red trade, I want to break it with a green trade, so I don't have a red streak. And it's essentially calling a timeout in sports. You know, basketball, the other team goes on an 8-0 run. You call a timeout to break their momentum, so it doesn't snowball. Momentum is very significant in many aspects of life, and trading is one of them. So for me, I'm calling the timeout, and I'm not going to I don't want to put in 2 red trades in a row, so I'm going to be extra picky, extra patient, and wait for a very high probability trade before I make another one. But I was looking for Sol to try and set a monthly high or low. The weekly time frame is a potential bear flag, and this is the bulls attempting to hold the weekly low. And it's something we're continuing to watch from here. Sol was one of the better bounces last night, but with the recent Bitcoin second leg down, we gave a lot of that back. And there's a lot of altcoins right now, they're forming 4-hour tightening ranges. So higher low is trying to form compared to the dump low. If we get some bounce followed through, we're going to scout a lower high, and it's just going to be an equilibrium that we watch for to continue tightening up. And we're watching for that on Mana as well, I believe. 4-hour higher low trying to form. Anything under the top of 296 is just a lower high. So the altcoins that did not break to lower lows while Bitcoin did are watching for 4-hour equilibrium attempts, knowing that if they're going to set 4-hour higher lows, that means Bitcoin has to change this hourly trend. So we haven't topped out officially yet on Bitcoin, but once we do, that hourly trend change confirming will likely align with 4-hour higher lows being set on Mana and Sol and other altcoins that have this same setup. So everything that I just described is advanced trading, more advanced trading. So again, I wasn't looking at any of this in my first few years of trading in general, and certainly not my first few years of trading crypto. So if a lot of that just went over your head, don't get discouraged, because you're just sitting in right now on Advanced Trading 101, and you're still in Trading 101, and you will get here. And this content will be forever available for you to revisit. So don't beat up on yourself if this seems complicated. And if you are in multiple years of trading, everything that I just said makes sense, and the world makes sense. And you will get there if you stick with it. So from here, Ethereum. Ethereum's holding on a bit better. So Ethereum did not drop to the lower low like Bitcoin just did. It double bottomed, and here we are testing resistance. And if the bulls get over 27.61, you can call that a 4-hour trend change. A double bottom and then a break of resistance is a trend change that will have the daily bounce underway. But again, bears are going to be waiting for a daily lower high, anything under 3,200. What we want to see from here, from bulls, is a big enough daily bounce. Again, we're scouting weekly higher lows. So we need a big enough bounce on the daily for confidence to return to the space, and then bulls are going to look for the daily higher low entry, and then if we confirm the daily trend change, the weekly higher low is set, and the bulls then attempt the weekly trend change. So on this bounce, that's going to give us a bunch of information. 382 retracement, possible bear flag for continuation down towards weekly support. 50% bounce retracement, all right, we got some space. Let's see if we can set up that daily higher low and shape up the daily trend change. So in my brain is 100 if-then scenarios just waiting for clues every single day to help me gauge which is the most likely scenario and which is the if-then scenario that's in my head. And the next most useful information, if we confirm 4-hour trend changes to bulls, how significant is the bounce retracement on the daily time frame? And that's what we're looking at from here. And Ethereum BTC, again, without even looking, I know it's been going up today because this last bounce, Bitcoin is significantly stronger. Ethereum is significantly stronger than Bitcoin. So here is the ETH BTC bounce already underway. And what I'm looking for is, can the bulls confirm a trend change back in their favor? Because what's very important for me is for the monthly uptrend of this ETH BTC pairing to remain intact. Because if we lose the monthly uptrend, that's a big red flag for Ethereum bulls. They need to keep this monthly uptrend going. So we got a monthly inside bar shaping up. It's probably going to remain that way. And then we'll have to see in March, do we break it bull? If we do, our new monthly high or low is set to try and continue the uptrend. And if we break it bear, then the monthly uptrend is going to be at risk of being lost. And so I'm constantly, when I'm looking to play bounces recently, or when I'm looking to play bull trades, I'm looking at Ethereum as my go-to because I know that ETH BTC pairing is in an uptrend on longer term time frames. And then I'm finding another coin, whether it's Mana, whether it's Sol, whether it's Luna a few times this year. Those, I look for 2 coins because I know one coin's going to bounce better than the other or show more relative strength than the other. And I'm not just going to put all my eggs in one basket. I'm going to diversify a bit. Certainly it's not diversification. It's just diversification of my chances of grabbing a stronger bull. So generally I've been taking 2 trades at a time when I'm swing trading. And I've been swing trading more the last 2 years in crypto than ever before because, again, the trading fees don't make sense to actively be day trading for me because I've got the stock market as that outlet for free. No fees in stocks. Yes, I can find alternatives to Coinbase Pro that have lower fees, but even if I get 10% of the fees that I'm getting now, it still doesn't make sense to trade crypto over stocks when crypto is so correlated to stocks. It makes sense to pay those fees when crypto is going nuts in volatility and the stock market is fairly calm and not doing the same thing. But if it's doing the same thing tick for tick and you have free versus paid fees, it's a no-brainer. So that is how I am approaching the crypto space. And that means I'm just swing trading more, which is fine. It just means, number 1, a bit less attention. And number 2, a bit less active. All right, I think that is everything I want to say. 11:45, not bad. So now I'm going to read all these wonderful things that you've been saying in the chat room. You can look at some altcoins. You can ask me general questions about technical analysis, patterns. You can ask me anything about being a trader and the trader lifestyle. But I'm reading the chat starting from here. Again, appreciate everybody pushing the like button and all that stuff. It definitely helps YouTube analytics. And there's definitely a link with my motivation to put out content with the amount of people that are interested in it. If I put out a crypto video and a marijuana stocks video and one gets 4,000 views and the other gets 2,000 views, I'm way more likely to put out the 4,000 view video next time around. And, the comments and the interaction with you all and the amount of reading messages that I do, it's definitely the interaction with you all that leads to the motivation to make content. Here I am on my day off doing a live stream because I enjoy interacting with all you. Have I ever tried to practice trading in a lucid dream? I have not. Unfortunately, my lucid dreaming is an inverse chart with stock trading. I just don't have the time for it. You need a whole, I say trading is a lifestyle. Lucid dreaming is a lifestyle, and you have to be conscious of it throughout the day and practicing a whole bunch of stuff in terms of dream recognition and reality checks and all that. And I was lucid dreaming like this when I was road tripping a decade ago, and then once the chart guys started, I lucid dream once a year if I'm lucky. And it's just because my mind is focused on charts and numbers and articles and information and not alternate realities. Litecoin, all right, we'll look at Litecoin because again, I'm just keeping an eye on this LTC, BTC long-term chart for the potential that it's a falling wedge. It's entirely possible this is not a falling wedge. I am not acting on this chart, just like the Bitcoin dominance chart, just like the dollar forever equilibrium chart. This is something that I know could lead to significant volatility if it breaks out. And that would just mean me jumping in Litecoin. And we had a bull move in Litecoin recently, this daily candle that gave it all back. I jumped into Litecoin for the possibility that we were going to break out of this pattern. And I stopped out break even. And so no harm, no foul. But that's the kind of approach that I'm taking here. If bulls show me something on this LTC, BTC chart, I will grab a position and just keep a low risk in case we give it all back because we've seen plenty of examples where we give it all back. And the burden is certainly on the bulls to prove us something. But I'm just watching these weekly lower highs because we've been setting weekly lower highs very clearly for a long time. And if this breaks out bullish, there can be a lot of power behind it because we can certainly see big time moves very quickly. But I'm not forcing a trade. I'm not just scaling into Litecoin, hoping it has its turn at one point It's just something that on a daily basis or every other day, I just look at this chart, check in, okay, where do we stand? Do I need to be paying extra attention to Litecoin this week or today? No? Okay, I don't look at it again for another 48 hours. And when I do look at it, it takes me literally 15 seconds. So it's just something that I know I'm constantly looking towards. So with this weakness on the BTC pairing, I know that Litecoin is not doing anything that Bitcoin is doing. I know Litecoin is not doing anything that Bitcoin is not doing. It's weaker. So right now, we're trying to bounce the same as Bitcoin. We're trying to change the hourly trend the same as Bitcoin, but there's no reason for me to be looking to trade Litecoin over altcoins that are stronger as long as LTC BTC is weak. And again, Mana BTC is way stronger than LTC BTC, which shows me if I'm looking bullish, my money is better off trying to trade Mana than it is trying to trade Litecoin. That may change someday, but it is not changing at the moment. If you want more information on lucid dreaming, I did a video on it. Pretty much done a video on everything at this point. But Google lucid dreaming chart guys. Appreciate you all. Do I ever get burnt out? Absolutely, but not often. I've been doing this, again, I say it often, but I have been doing something related to chart guys, charts, trading, or technical analysis, literally, and I'm not, exaggerating, 363 days a year for the last 6 years because I love it, which is why, again, I'm here on my day off. And I do feel burnt out. I don't feel burnt out with making content and with answering questions in the chat room. I mean, Chart Guys members will tell you that I live in that chat room. And I don't get burnt out with that. If I'm going to get burned out, it's with my own trading. I reached a period in 2021, and I went over this in the Traders New Year's Resolution video, 2021 or 2022. Google that. Again, all this is on our YouTube playlists. And I talk about how there was a point in 2021 where I hit the longest winning streak of my career of just consistency. The flow state lasted for like 6 or 8 months. I just couldn't lose, and trading was too easy. And I got to a point where I lost all motivation to make money. It was like, I didn't care about profiting. And I knew whenever you hit a streak like that, you break it with a big loss. And that ended up happening to me because I got lazy. And, I had life stuff distract me with a flood and my dad visiting. And I made an error thinking I stopped out of a Baba trade. And then I came back to my biggest loss of the year when I fixed it all and realized my mistake. That's how a streak like that always ends, every time. But during that period of time, I did not care about my trading at all. I didn't change anything about my content output. I didn't change anything about answering questions in the chat room, but I just stopped trading for a while because I didn't care. And it was self-sabotage. And I talk about this in the video, but as soon, all-time highs in my account for 7 months in a row, and then as soon as I get that big loss, all right, I got a challenge now. My challenge is to get back to where I was. That doesn't mean as fast as possible. That doesn't mean go on tilt. That means, all right, buckle down. You learned your lesson. Take a reset, a mental reset. Go out in nature for a bit. Clear your mind. Get in the right mental space. And now you got a challenge again, because I was at a point where there was no challenge. And it was self-sabotage, without a doubt. I made myself lose subconsciously. XRP, all right, we'll look at XRP because it has been a leader recently. XRP BTC just made a big bull move. Again, whenever I want to know, who's been a stronger altcoin, the two things I do is I look at my list, and I always organize my list. Who's standing out stronger? Who's standing out weaker? Clearly, Luna is having a great day. Ethereum's right behind it. And I just constantly, I sit down at the computer in the morning and I organize my list so it's strongest to weakest. And then I can gauge how things change throughout the day just by looking at this list. So if FTT is then in a minus 2 position, minus 2% in 6 hours from now, I know that it has drastically shifted what its positioning has been. And I can see that just because, wow, it was stronger this morning and now it should be down towards the bottom of the list. So for XRP BTC, we have a daily uptrend. So number one, the bulls have complete control as long as the daily uptrend remains intact. But the other most notable thing here is XRP hit the highest level that XRP has been to BTC price in 4 months was just hit 2 days ago, which is notable. 4 months is a long time. So, okay, let's zoom out bigger picture. Still in a monthly downtrend, XRP, BTC, weekly resistance. We can call that a double top. It's close enough to the top back on December 21st, but it's a clear weekly trend change to the bulls. And the question now is, how long can the XRP BTC daily chart remain in an uptrend? If I'm bullish XRP, I can continue to trade it bullish as long as it's in a daily uptrend. When we lose the daily uptrend, maybe I'm trading it a bit less aggressively. Maybe I'm focusing on other coins. Inside bar on the daily. If they break bear, we scout a daily high or low, ideally holding EMA 12, which has been holding. But it's a notable move up. And so I look at XRP USD, and I can see that we tested daily resistance and failed. But the weekly consolidation here, which has just, no, it hasn't even started yet. 2 inside bars. But again, look at the retracement. If I want to compare it to Bitcoin's 66% retracement from the top of its weekly move, here we are at about 45% retracement. So I can see that it's even stronger than Mana as far as how much we pulled back. And again, the less we pull back, the higher the probability of being able to confirm a weekly trend change or break the recent high. If I pull back 70%, I've got a mountain to climb. I've got bag holders from back here and price levels that I have to work through to get back to where we came from. I need more volume. I need more buying volume to get back up there. If I pull back 40%, it's a much different story. The mountain to climb, the hill to climb is much lower. When did I realize that you will have been? When did I realize that I would be a profitable trader? There was a moment where, let's see, it took years. It took years, probably year 4 or 5. And it wasn't full time. You know, the last 6 years with the chart guys, it is full time. It is as full time as you can possibly get. Before that, the 5 years before that, I was road tripping around. I was having a good time, and I was definitely putting a lot of time in. But pretty much the first, 2 years, I put in a ton of time and effort and research when I was first understanding technical analysis, went on a road trip, traveled around, enjoyed life. And then I put in maybe 5 months where I said, full time, I'm learning technical analysis every single day as if I'm going to school, as if I am getting a degree. I'm putting that much time into learning how to trade and learning technical analysis and watching markets. And that 5 months span took me from here and a big leg up. And that's when I started putting out my own content and own analysis on forums and stuff like that, and observing other people very, very closely, following, watching what they were doing. And I would say year 5, I knew that I would do this for the rest of my life and that I could do it for the rest of my life. Probably year 4, I had a big gain in a MJ cannabis sector penny stock run. And I can remember saying to my dad, I'm going to be a millionaire. I'm going to do this. I'm going to do this forever. And he chuckled, and he wasn't doubting it, but that was a distinct certainty. I know that that's what it's going to be. Interest in dividend stocks. If we get another major wave of fear, I build long-term no-touch positions in big-time fear. So I have my first SPY long-term no-touch position from the COVID dump, and right now it's up 95%, which I never in a million years would have imagined it would go 95 to 100% as fast as it did. But next major fear wave, if we're about to enter a bear market like everybody's looking for, then I will buy dividend stocks in a long-term no-touch IRA position, and I need significant fear. Give me S&P 500, weekly oversold conditions. And again, I've got it all laid out in the video. Look up Dan's plan when it hits the fan. It's on our YouTube channel. But I talk a lot about it in that. How do you get the guts to trade larger position sizes? Profit cushion. So when I first entered the crypto space, I took the majority of my liquid capital and I put it in Ethereum, and I was looking, my goal was I want a down payment on a house and I want to make 100%. Pretty lofty goal, but we were in Blue Sky Breakout and I know how powerful Blue Sky Breakout is. So all right, I want 100%, I want a down payment for a house. Within the first month, I don't know what the percentage was, but 10 months later, the percentage was over 5,000. So within the first month, it was probably multiple 100%. And at that point, my psychology shifted. Okay, I've got my goal. I'm going to pedal to the metal until I take a big loss. And I know that even if I take a big loss, I'll go back down to my original goal. And that will be Perfectly fine. I got my goal. And if I don't get that big loss, I'm just going to keep running with it. And that is how I suggest going aggressive when the market conditions dictate it. If you're in an equilibrium or a sideways range, it's not the same as blue sky breakout, obviously. So pedal to the metal, aggressive, all in positions. I was buying dips and oversold conditions with all of my cash. And there were times where we would break bull and I would market buy all of my cash because those bull breaks saw a lot of follow through. And again, it was having that safety net. I know worst case scenario, if I really screw up this trade big time and it gets away from me, I will still have my original goal. And so that allowed me to just view it all as flashing numbers on a screen and just really smash it. Thoughts on using Ichi clouds? I have never put in significant amount of time to study it. I put in a few hours to understand it. But I am of the mindset that I am better than 90 whatever percent of traders out there. But I know that there's a better Ichi trader than me. There's a better Elliott wave trader than me. There's a better strat trader than me. There's a better whatever, any style. There is a better trader reading the tape, fundamentals. There's a better trader than me out there with that style. So I know that it can work for someone and it can be someone's backbone for technical analysis. It's just not for me. And there's nothing wrong with that. How many years to become profitable? I was profitable year one. I was very, very lucky. I shudder to think at what would have happened if I lost money in my first year. I stumbled into a cannabis penny stock bull market because we were just starting to see states legalize or vote to legalize. California failed Prop 19 in 2010, but the run up to that vote gave me profit cushion. I didn't know what I was doing. And I stumbled into a bull market and came out the other side with significant gains that gave me a profit cushion. And that allowed me a lot of flexibility to then learn. And if I started with a red month or a red year, man, I'd be in a 9-to-5 right now. S&P 500 futures, are they making a move? Nope. Bear break, no follow through. It's starting to do what Bitcoin was doing. We would bear break on Bitcoin yesterday and lack follow through down around here. So I expect that the S&P 500 is more likely than not to get a 4-hour bounce going. Maybe not 4-hour, hourly bounce again sooner rather than later. My dog Sweetie Pants is snoring. What was my approach and way and structure of self-teaching for those 5 months? Time. Just putting in so much time. I was in forums. I was on iHub. And I was interacting with some traders who clearly knew what they were doing. Just from me observing them, they are more right than anybody else in these chat rooms or these forums. So I followed them. I asked them questions. They answered those questions and pointed me in different directions. Oh, you use RSI a lot? Great. I'm going to go read 6 articles about RSI. At that point in time, the YouTube content, was maybe a fraction of what it is now, maybe less than 10%. So there were still videos out there, but it was a lot of articles. And I would just listen to what they would say, and they would say something I don't know. I don't understand it. Okay, that's my rabbit hole for today. I'm gonna learn everything I can about RSI and how it's used for trading for the next couple days. And I've also done that with a ton of things that I ditched and just don't use. So again, I put in 5 hours reading about Ichi Cloud in my trading career, but it just didn't click for me. And I also found my trading style fast enough where I'm looking to tweak it here and there. I'm looking to evolve a bit as a trader, trade different styles, but the core is still the same. I'm not looking to just all of a sudden become an Elliott wave trader because my style is working. If something doesn't work, if it stops working, that's when I look to significantly change something. But if it ain't broke, don't fix it, is my current mindset. All right, we got one more. What have I learned on trading broadening formations? I'm better at recognizing them. I still don't actively trade them significantly because they don't match my style much. It's the kind of thing where, I didn't trade wedges for a long time, and I learned wedges, And because my style of oversold bounces is one of my edges, falling wedges fit very easily into that. With wedges, honestly, it's still for me is just a don't trade zone. And I can recognize one's forming, and I can look for the potential that, you know, a bull break is going to lack follow through and reject from a wedge resistance, and a bear break is going to lack follow through. But it's one thing, you know, it's a pet peeve of mine. I was in a chat room, I won't say which one, a trading chat room before we started the Chart Guys, and it actually was a big motivator to starting the Chart Guys because I didn't like how he did things, and I got in trouble for answering people's questions because he wanted to sell them courses. And he was not an options trader. And I convinced him, like, hey man, like technical analysis can work for these options, and these options are essentially like penny stocks, but you can, you know, limit your risk in terms of, you know, I just convinced him, look into options. And literally a couple months later, he put out a course on trading options. And I'm thinking to myself, dude, you have not been trading options for 5 months. You have no business saying one word to anybody about teaching them about this. But he probably made a whole bunch of money on that course. So for me, you know, am I going to put out a video on broadening wedges? No, because I don't have an edge. I don't have confidence yet, constantly observing them. Maybe someday I will. Maybe it's just a pattern that I recognize and just don't trade as long as we're in that pattern and wait for a pattern that is my edge. But I'm not the guy to teach you about broadening wedges right now. We do daily live streams with the Chart Guys. I live stream twice a day, 2.5 hours, Monday, Tuesday, Wednesday. I mean, we have 3 live streams a day with going sometimes 4. So 3 to 4 hours a day we're live streaming. And then plus Lori in the morning. On this channel, Lori is live every pre-market. Lori is an absolute, what's the female version of a stud? I don't know. But that's what she is. And she puts out free, incredible content on a daily basis. You know, my girlfriend is not trading right now, and she listens to Lori every morning that she can. And it is, so that makes it 4 to 5 hours on a daily basis. One of them is free, and the rest we have with our Chart Guys chat room and live streams. Can I show an example of oversold bounces? I have, let's see our YouTube channel real quick. Again, our YouTube channel is 6 years old, and I think it's over 9,000 videos at this point. So it's on there. If anything you're looking for that I've ever said is on here. And how I trade crypto breakdowns. There's your bounce video right there. 4 weeks ago. We got wedges, we got fibs, we got a stair-step strategy. There's the back burner strategy. These are all the lessons, planning for the next crash, my plan when it hits the fan, options, trade reviews, Q&A, psychology. We got a psychology playlist, technical analysis with poker, trading with patience, emotional control, how trading is like surfing. DAX is dropping for sure. Russia is dumping big time. But again, everybody and their mother was expecting the dollar bear market to continue forever. Its peak dollar bears was right here. Social media, Twitter, CNBC, dollar collapse is all they were talking about right at the 6-month higher low bottom. So I'm still watching for that weekly higher low on the S&P 500. Might not happen. I won't lose a bunch of money if it doesn't happen, but I will make money if it does happen. Have I ever blown up account? I have not. Again, I was fortunate enough to stumble into a bull market. Plenty of losing trades. You know, at one point I was in a Chinese penny stock for a overnight swing, and it delisted, and I lost $5,000 of my maybe 30 grand capital. And that day, the next day, I was completely fine with it, and that let me know I can do this long term. Advice for traders struggling to become profitable even after multiple years in the game. So you have to identify what's wrong. You know, is it the psychological aspects? Is it not having a firm grasp of technical analysis and how the different time frames interact with each other? Not knowing what your edge is? Are you better at trading bullish or bearish? Are you better at trading equilibriums or oversold bounces? You know, I trade oversold bounces and I love them. We have traders full-time traders in the chart guys who won't touch oversold bounces. We have full-time traders who trade 90% of the time bearish in any market. So you got to find your edge. You got to determine what are my weaknesses. Why am I failing? Is it a lack of discipline? Am I putting a stop loss on every trade? If I'm not, why? Why am I not doing that? And again, trading is a lifestyle. Everything about trading has impact in other places. Again, you show me someone and how they interact in their car in traffic, and I can tell you if they would be a successful trader or not. Because if you're getting road rage, nope, no chance. So are you level-headed? Are you able to control yourself? You know, if there's if it's an open bar at a wedding, can you have 2 drinks and enjoy yourself? Or do you have 4 and get sloppy? Maybe 6 and get real sloppy. These are all aspects of personality types, because there are certain personality styles and traits that are beneficial to traders and that are detrimental to traders. And we have to dull all those edges and become the best. You know, patience. On my road trips with other individuals that I took, I was practicing patience on a daily basis. I was frustrated, and I recognized I need to change this. This is not a good way to live. And so I practiced patience, and I had no implications of applying that to trading when I was doing it. But in hindsight, it had huge implications to my trading and the patience that is required for successful trading. All right. Everything that we just talked about and how we just went into more psychological things, go back on our YouTube channel and look at all the Q&As, because there's at least 3 or 4 of them that are an hour and an hour and a half long that is all this kind of content. Love you all. Have a great Monday. I'll see you Chart Guys members in the chat room, and we'll see everybody else soon. Do good.